Just 74 days ago, Bitcoin was flying high, trading around $100,000. Trump was coming into presidency, the first crypto president in the world, and everything seemed to be rosy. Meme coins were popping off, and we were a month away from seeing the inevitable Trump coin pump and dump.
Look, I hate to do it, but I will do it. I would give myself an A+.
Now we find ourselves 74 days later, after that fateful day when the 3-day rule came up, the 3-bar signal right here on the 21st of December. So now we find ourselves down. From that time, we looked at how the market was likely going to be changing trend based solely on that one signal alone. Now, of course, there are plenty of other trading signals that came up in that period and have now led to the price action that we find ourselves in. What we're beginning to see, at least from what I can tell with the data, is signals around certain lows. Hit the like button, subscribe to the channel if you're new here, and of course share the content with a friend so hopefully they can survive the next leg of the market. The signal we are looking at covers Bitcoin and the stock markets. I cover everything here on the channel. Well, the traditional markets and the financial space, looking at the stock markets, some stocks, Bitcoin, the real estate cycle, economic outlook, and of course, for the degens among us, we'll throw in some altcoins as well. It's your home of macro cycle analysis. You're joining me, Jason Pizzino. Let's kick it off with a couple of quotes that sparked my attention today, just thinking about how the market has been evolving over the last few months. And of course, this happens throughout history, but none more so than the current time we find ourselves in. And the point here is patience. If you're following me on X, you'll notice that I talk about patience a lot, especially when it comes to resetting the sentiment of the market, resetting the sentiment for the stock markets and for crypto. And there seems to be no way the market can get out of this. You can't not reset the sentiment. Double negative there. The sentiment has to reset. Everything has to die before there is a rebirth. And whether this is actually something that Warren Buffett said or if someone's just put his face against this quote, it's a fantastic quote nonetheless. The stock market is a device for transferring money from the impatient to the patient. Now, you would have seen this, maybe you got wrapped up in it. We've all been there at some point before. This comes down to, say, things like altcoins. You got your penny stocks back in the day before crypto was around. You still have penny stocks, but everyone's more so interested in altcoins, cryptocurrencies, of course, and the like, meme coins, NFTs. Before that was ICOs, and we had any other narrative that pops up. And so the impatient always look for how to get rich quick, and their money generally gets transferred to the patient, the people who stick around and follow a market. Following, to me, means reviewing, analyzing, tracking your progress, writing down your thoughts in a trading journal, and potentially acting upon those thoughts as well. So that brings me to the first topic, around the impatience and patience, the signs and signals that we see around the lows. And of course, this is referring to the market sentiment. And we can see this from an indicator for the crypto fear and greed index. Now, I've also got the stock markets to get through. There is something far bigger than altcoins that everyone loves to talk about. But, we'll get to that in just a moment with the stock markets, of course, leading the charge. I think more people in crypto now understand the importance of seeing what's happening in traditional finance and seeing where that money is actually going according to the charts. With the crypto fear and greed index, I often look out for times, the reset on the chart to come back down to generally around fear, which is the orange space here. You can see at the bottom, this is the crypto fear and greed index, part of the TIA indicator suite. A link to that is in the video description. And there is a 7-day free trial if you want to test out the indicators here, including the GAN Swing Pro that you can see up here that are used for trading, looking at the swings, looking at entry points and exit points. But back to the fear and greed index, I look for fear. Now, if there isn't enough time in fear, generally that means that the price action isn't going to have that much longer in the uptrend. Say you get a dump into fear and then a push higher, then there hasn't really been enough time to wash out the liquidity or wash out the greed that has been in the market. This time, however, we've hit extreme fear multiple times. We're still in extreme fear, which is in the red zone here. And it seems like we're going to make it to the time frame that we've been watching now. Now, in those previous videos, we went through and checked out how long these time frames take for the market sentiment to reset. And generally, without going through all of the data that we've previously covered, you can see here, it's about 4 to 5 months. Sometimes longer, depending on how crazy the market got, depending on how much greed there was. You need that time to wash out and get rid of the greed so that you can build again, reset, and start to grow in the greedy direction. So reset into the fear, then grow into the greed. These last few times here, 4 months from top to bottom, and then we had basically 5 months from the top to the final low. At the moment, the 4-month time frame takes us out to about mid-March. And as I've been looking at on the channel, this is not to do with price, because at the end of the day, I don't know what the price is going to be. No one in the world knows what the price is going to be, but we always get the comments in the comment section with people thinking that someone has to know where the price is going to go. No, we just look at probabilities. Is there more of a chance of going up, more of a chance of going down? Assess your risk, place your bets. That's the end of the game. It's pretty much that simple. Anyway, we've been looking at the first quarter of 2025 being relatively unstable and quite volatile because of what we've seen through 2023 and 2024, with the markets being relatively clean trending, nice, strong moves to the upside. This was at a time when everyone was calling for recession, and most didn't think that this was possible, that we're going to see new high prices, say, for the stock markets and for real estate, because we've just come off 2022, which was a bear market for the stock markets. Those times, the patience, the bear markets, I've said many, many times before, they're the easiest times to trade. When you get into new all-time highs, I think they are some of the hardest times to trade because the volatility picks up. You see big swings and the emotions go wild. We literally just saw it over the last 3 days. Big emotions with Trump, big emotions with Trump again, and now we got a bounce, potentially, not confirmed yet, but this could potentially be a higher low in the making after everyone got really pissed off yesterday with the market absolutely driving them out of their positions yet again. So the sentiment continues to reset. There's one of the first signs I see when it comes to each of the lows. We've seen the low form here. We saw another low in July. Obviously, August put in a lower low, and then September, a higher low. And you had the reset come through underneath fear, reset the market. You had it again in 2023. Fair bit of time here in the orange, the fear. That happened through August and September. Then the market took off from there, and basically can work our way back, and the same thing happens over and over again. The orange potentially into the red, but generally, if you're in a pretty strong market, you might only see the orange, and then the market price moves higher from that after there's been enough time in the sentiment to reset. So basically, us in the markets, you need to wash out enough people, and how it happens, I don't know, ask the stars and the horoscopes, but essentially it's like 4 to 5 months each of those periods. And that period is getting very, very close to happening again, somewhere around the next, what are we on the 5th? So probably in about the next 2 weeks' time. So that's the first thing that I've seen with BTC. So that's on Bitcoin. Now, it can also be applied to the stock markets. We're looking at the extreme fear here. It has continued to fall. Yesterday was 24, today's at 20 because we saw a lower price there for the SP500. But I'm not going to go through the sentiment again for the S&P. Just know that it happens on basically each of the occasions. I want to cover something that is a little more objective speaking, and where people are putting their money and whether they're taking it out or putting it back in according to the data. Not something that I've made up, but essentially according to the data that you'll find on the charts. But before we have a quick look at that, just on the extreme fear here, the sentiment, you can see it's broken underneath the trend line. And as we're in a macro bull market, sometimes this happens at extreme lows as well. August was one of those. The Japanese yen carry trade fears that the Bank of Japan put up their interest rates, and that was going to affect all of the trades around the world. The markets dumped nearly 10%. Well, this is the SP 500. Everything was crashing like it is at the moment. Now we've got the tariffs happening and all this sort of economic news, which I've got another very interesting quote, actually, I think just coming up in a sec, about why these things are happening. And it's, to me, goes back to, well, you just got to have patience. Patience around the markets when all of the macro indicators are still suggesting there is further upside, even though in the short term, you've got everything crashing and fears that we're about to experience, Trump 2.0 with whatever BS comes up, and that we've seen it all before in 2018, therefore it has to happen again. Generally, when that happens again, it's not as severe as the first time because everyone knows, we've already seen the playbook of what happened the first time. And I think this quote from Peter Lynch sums it up almost the best. We're looking at analysis here. I spend about 15 minutes a year on economic analysis. It's probably tongue-in-cheek. He probably spends a bit more than 15 minutes, but generally just letting people know all of this crap around announcements of CPI, PPI, employment rates, you name it. This is Forex Factory here, looking at all of the high-impact news announcements that come out from the US, from the EU, for us here at home, Australia, GDP news, all this sort of stuff, economic analysis. And from what Peter Lynch is saying, one of the best hedge fund managers of all time, he barely spends any time on it at all. Just forget about it. It's just noise. It's just news. To me, anyway, follow the charts. Peter Lynch is a bit more of a fundamentalist, so he'll look at the stocks and understand the company. But as long as you get to the same result at the end of the day, then who cares? Okay, so fear and greed indicator, that also works on the SP 500. And at these extreme levels, sometimes you see it hit this moving average, goes under for a while, and then comes back above. So S&P 500 is now down nearly 7%. Looking at a little bit closer basis here, you can see it reached 5,740 odd points there, getting very close to the next support level, 5,700. So as I've been talking about now for months, the levels I'm watching are 5,700 being the two previous lows here, significant lows, and the previous top. The market came back, tested those levels, ran up. Now, even if we find support here and bounce above, or actually find support and then break down, there is still the significant level here at 5,600. That's the previous tops there out of the August low bounce, and also the 50% level of the entire range at the moment. This is from the current all-time high, which is also a double top. And from that double top, the market has also come down and tested the 150% level of that double top. The only reason I bring that up is because those areas can be pretty significant turning points. We're on a daily chart, so it could be a nice daily turn, either there at 58 or at this support level, which is also the 200%. So it's this double top here where you can project out price targets to for the market to run to and see whether you get some turning points. So generally you will see at least a short term, if not a change in trend. And so the trend is down. You might see a change in trend around this 5,700 point level. Yet to be seen. It could be there now, 5,744. Only just hit there. So let's see what happens from that point with a nice close above 5,800 points. So I'm getting to the next big thing that I see at these lows, and it is basically what those traders and investors are doing. And I say quote unquote because I guess everyone thinks they're a trader until the market goes against them, then they hold for the long term. We've all been there too. The lows here are looking at the volume. So you can see on each of these significant lows, generally speaking, you've got very, very high volume. And we have literally just had one of the highest volume days. We've had the highest volume day in 2025. We've had the second highest volume day since, well, basically in the last year and a half, all the way back to 2024, because the highest volume day was that low of the trade war, which called the low, and then the market ran up from that. So as for volume, it's basically in the top 10 in the last 5 or so years, which is pretty damn significant. The only other times this extreme volume came up was around the lows. You had the US inflation crisis back at the bear market low in October, US rate rise fears. They were even lower volume than what we currently see. We had high volume, very high volume at the banking non-crisis, as Michael, my brother, likes to call it, because at the end of the day, was it really a crisis if the market from that low ran up 62% still currently sitting at 52% above the old banking crisis. It's obviously well above the US debt ceiling crisis, the Middle East conflict crisis, the next Middle East conflict crisis, and the yen trade crisis. I mean, there's been so many other crises in between all that, but if I start putting arrows everywhere, you're just not going to see anything on the chart. There is always a damn crisis that needs to be talked about. Just like now, we can whack on tariffs here, tariffs here, tariffs here, and I think this is all going to blow over as just another nothing burger in the markets. So what we are seeing, I think, is the formation of a low. That doesn't mean that today was the low either, because we don't have confirmation of that. But the main thing I do with my own trading and investing is try to look out for things that others aren't necessarily seeing, or they're getting wrapped up with the sentiment thinking that this time is different and it's going to collapse, or they think that this playbook is going to play out exactly the same as what happened in 2018. But once the market's already seen it, they're prepared for it. So if now isn't going to be the exact low, what can we look out for? Well, I've given you multiple strategies here. I've given you multiple price targets to look out for at the lows. And then we need to see a reversal. And for me, I look for the reversals when it comes to the swing indicator. So the Gann Swing Pro here, you look for the lows, look for a bounce, look for the higher lows to begin to form, and then bounce away. Now, the daily chart can give a lot of signals. There is a lot of information there. So something more like maybe a weekly swing chart is going to help, where you can start to see some more of these lows come in out of significant corrections, just like October or July into October, big bounce out, higher low form, and then you've seen a pretty significant move out of that higher low that broke out of this entire period. Now, we've also got the price targets that I've mentioned here. Next one down is around 5,600, 5,640, and then also the other higher low here at about 5,400. And should both of those break down, well, you've still got the yen carry trade low there at 51.20, and we've got the entire bull market range so far that can come all the way back to 4,800. But we don't need to worry about that at the moment. That is a very, very long way from the current market action. From the top down, that'd be a 21.5%, 22% correction, which seems a little bit unlikely considering we've already seen a 20% correction back in 2022. Double digits aren't out of the question. We're at 7% now. Double digits would take us to about 5,500, so still above the 5,400 low and also above the 5,100 low. And if it did get to the 5,100 low, which is pretty crazy, it'd be a 17% correction. We know markets can do double digits. It's not very common. Double digits, sort of 10 to 15%. Things over 15% are, again, less common. The data that we've shown on the channel, it doesn't happen all that often. I think it was maybe once every couple of years you would see something 15 to 20-ish%. And then the 20% plus are even less likely, less common, something above 2 to 3 years, sort of once every 2 to 3 years. So just looking at something that's around the 15%, that would take us back to these lows here at about 5,200 points. So all of the probabilities, even if it were to be one of the more severe corrections, would still have us trading above those lows. As I've been looking at, the main thing I'm referring to here is what happens at these lows is this extreme volume that comes back into play. And that's what we saw yesterday with a reasonable close here above 5,800 points. Is it the low? Obviously, you need more indicators to suffice to tell you that the trend is going to change, but at least we're beginning to see those extreme sentiment, market sentiment to the downside, that extreme fear, and that volume beginning to come back into the market like we've seen on each of these significant turning points. That was a look at the SP 500, so the American markets. However, for the markets around the globe, they're still crashing. 2 days ago, new all-time high for the Euro Stoxx 50, so the top 50 in Europe. And then yesterday, nice correction, nice crash down here of 2.77%. Zooming out, that's really 1 day down from the all-time high. I'll be looking at any sort of corrections back to about 5,000 to 5,100 points, all part of a balanced correction here. So that's for the rest of the globe. I've talked about all the markets crashing, but these are the things we see at the low. I've talked about the lows and the markets crashing around the globe. Obviously, top 50 there. Australia also down. Canada also down, also crashing. But something that is actually some reasonably good news for the markets is the US dollar. This is also crashing and getting very close to breaking the swing and breaking the 50% level. So I wanted to cover those off because I probably mentioned them somewhere in the title, just so that we can get a full round view here of all of the financial markets. Just 0.6% away from breaking the swing and breaking the 50% level. This would qualify as a significant change in trend and potentially would see further downside on the US dollar, which, of course, well, maybe not of course, but generally you would see further upside on assets like other commodities like Bitcoin in this case, which of course has found, at least in the short term, a low around that $82,000. Now the Bitcoin and crypto data is coming up, but first a shout out to our channel sponsors. Bybit did fantastically well with that hack, 1.4 billion, not a cent lost, and everyone's transactions went through. Of course, that doesn't mean that you only hold your assets on one exchange. However, they do have a debit card, so you can start to spend if you do have any sort of dollars, crypto, anything like that on that exchange. So check that out. Link is in the video description. Bluffin, no KYC, and 100K bonus. Spread out that risk amongst other exchanges. That's basically the same message that I've been giving for years upon years. We all need to use them. So might as well spread out that risk across multiple different exchanges. And for the Aussies, SwiftX link here as your on-ramp into crypto and get 20 bucks of free BTC. Okay, so over to the crypto data and a look at some of these other, I guess, signals and indicators that I see when it comes to the lows. The Google Trends, especially for the words crypto and Bitcoin, have been putting in higher lows. I take it out to the 12-month here. We've been seeing pretty decent higher lows. The market's starting to run up. An interesting one here for new viewers. If you are a new viewer still watching at this stage of the video, congratulations. You've beaten the TikTok brain. I think we're over 20, 25 minutes right now. Now, if you are new, watch when you, or see if you can remember when you came into crypto or Bitcoin. It's going to be a bit hard unless you've done it in the last, sort of 7 to 30 days. But if you see it when the search volume ticks up, say in this case, Bitcoin or crypto, then you might be entering at a time when everyone else is having a look at Bitcoin and crypto as well. What I'm using this for is just to have a look at, are we seeing more people enter the space? Over the 12 months, we've been seeing higher lows beginning to form here. Bit of a push higher for BTC, obviously over the last couple of weeks here with Trump and pump and dumps going on, crypto slowly climbing up, but at least it's above the October-November period. And we take a look out to 5 years, we are above those lows that were set back in 2023. So, 6 for crypto and 16 for BTC, a low there of 15. We saw another low there for Bitcoin at 17, and the recent low is at 23. So although people are getting washed in and out of meme coins and altcoins are getting absolutely destroyed, there are more people sticking around, or at least more people searching for it and getting interested in the markets, which brings on more exchange volume. So the last few days, as we've been talking about, we're watching the exchange volume also increase here from 40 billion up to nearly 80 billion. So the exchange volume over the last 7 days has nearly doubled. And I dare say once the next data comes out for the next, 4th and 5th of March, we'll probably see this creep a little bit higher because we've seen quite a lot of liquidations over the last 24 hours, which means the exchange volume was also higher. But one might question, well, if you're seeing a lot of liquidations, is this people actually sticking around? Look, I don't know where the hell they're getting their money from, but you're seeing the Google Trends tick up. You're seeing the exchange volume continue to tick up. Maybe it's the same money they've had and they just keep losing it, and it keeps going to the patient. So from the impatient to the patient, those who are learning how to trade, making some significant gains, of course, and all those liquidations are basically wiping out the people who are basically tourists in the whole game here. So the liquidations over the last 24 hours, I saw this creep up to about 800 million, 540 to 250, very close to 800 million. Day before that, crazy numbers, 1.1 billion, 800 million, 900 million. I think it's about 6 billion in those few days there. So a lot of liquidations, yet the market continues to hold up. The fear and greed for Bitcoin, which we covered at the beginning of the video, a quick look at today's readings at 20, 15, 21, puts us in a pretty good position for a reset. I won't cover that again here. I'll save it for tomorrow's video to see how this reset pattern is going on. I'm looking out for that next 2 weeks. As for the USDT dominance, another good day here. On Monday, so we had a big dump. That was Bitcoin pushing up higher, cryptos pushing up higher on the back of Trump's crypto strategic reserve that he announced. Then everything dumped, which means the USDT dominance went up. So people took profits, chucked it back into stable coins here. Now in the last 24 hours, we've seen a lower top, and all these closes, thank the crypto gods, are underneath the 50% level here, 5.19, 5.2%. So that is a really, really good sign here out of this double bottom. Let's hope we can see some more closes underneath 4.7 and these lows here around 4.6. So this is all sort of slowly trending towards the massive bull mania. What isn't necessarily trending towards the bull mania, unfortunately, for us ETH holders, is Ethereum. Piece of shit is still not playing ball. It has done some minor things here. It's tested 2060, which is the 50% level. Well, this is the extension. It's tested these lows. We haven't got a close on the week yet. It's really looking very, very weak here, and like it wants to continue to fill in the gap of this price range, somewhere between 1700 and basically where it is now, around 2100. So if you start to see a breakdown of these lows, probably going to come back and test this range, if not the range lower there at 15 to 1600. So really not great stuff there for ETH. And I've mentioned before these two other price targets, 13 and 1200, 1166. That's basically your 150% off the double top, which I've shown many, many times across multiple different assets. Bitcoin, it's happened on the SP 500, it's happened on stocks, it's happened on basically everything. Look at the double top. Double top comes through 50, 100, 150%. 150% of the move. That's recently. Bitcoin, 150% of the move. ETH, why would ETH be any different? It would blow my mind if ETH got there, 1,166, but it really wouldn't be surprising considering the double top in play at the moment. It's just going to take a lot longer, and basically that's the weakness there on ETH. XRP, stronger position, keeps fluttering around between two prices here, $3 down to $1.80. There's still no signs of the follow through yet because of the closes here, and the volume is also dropping off. But it doesn't mean that XRP is done and dusted. They're just waiting for its own turn to reset. Solana, on the other hand, continues down, closing underneath those 50% levels. And should that also continue on, well, again, we're looking between $110 and $120. ADA, slightly on the stronger hand here, but really needs to close above these tops. The tops being 115, 116-ish. You can see some nice closes above there. That's going to put it into a much stronger position. Otherwise, still above 82 cents is a relatively good position as well to consolidate. But that's where you're going to start to see more and more strength come through above that 115 to 120. SUI, as we've said, it wasn't able to hold the ground above 290. Therefore, it had to come down and test this low. I'm a big fan of SUI. I think it's going to do some good things in terms of price later on. But as I've been talking about since the top, it has shown weakness. It's shown weakness after weakness after weakness, but in a relatively stable way compared to something that basically just dumps like the meme coins and then does nothing. So it's still all doing very similar things to last time, not exactly, which is okay. Things are supposed to rhyme. And then looks like it wants to come back and test this level again around that 220. Therefore, a breakdown looking somewhere around $1.60, $1.70, and potentially a little further than that. But let's just see what happens when it gets to around that 220 this time. And also the free crypto and economic report, which went out yesterday. If you did get it, great. If you didn't, subscribe now and you'll receive that in your inbox next week. And I'll also see you on X. Stay safe if you're on the Gold Coast or Southeast Queensland with the cyclone. And I said goodbye about 3 times. Peace out.